SABC's Mongeni Mutwa has more.
It was 2 years coming, and until it happened, there were fears of massive capital outflows from developing countries like South Africa to the US as investors would be chasing higher yields. But those fears have dissipated.
It's already baked into prices, whether it's the currency or the market prices, as we are saying that it was expected, But now, definitely there will be some outflows, especially from emerging countries, but we don't expect those outflows to be of significant magnitude. So we should be able to be okay. As we've seen, the rand is just flat where it is now.
The South African Reserve Bank hiked interest rates by 50 basis points last month as a preemptive move to shore up the rand and prevent an inflation spiral. The US Federal Reserve is widely expected to continue hiking interest rates next year, but some analysts say there is no need for the South African Reserve Bank to do likewise.
I don't see the reason why our Reserve Bank should hike, given that the rand just managed to at least regain some of the losses that it made. It managed to retrace. It's almost under 15 rands. And our inflation is not out of line. But the most important thing, I think, the path for the Federal Reserve, it will be a very slow one. And most importantly, it will be data dependent. So we don't even expect the Reserve Bank or the US Federal Reserve to have 4 rate increases next year, because they emphasized that it will be very gradual, and more importantly, it will be data dependent.
Meanwhile, international credit rating agency Moody's revised its outlook for South Africa from stable to negative yesterday, citing weak economic growth in the main. The move was widely expected as it follows similar decisions by Standard & Poor's and Fitch recently.
More or less, all the rating agencies, we've got more or less the same rating, but now the outlook for Moody's is no longer stable, it's now negative. But fortunately enough, we know that our National Treasury, they're working on those things, and the most important thing is to make sure that we continue with fiscal discipline, and we're busy doing that. So I don't think that should be much of a problem.
A little